Financial Focus Friday. It's your girl Elaine Forbes Daisley, aka the one and only the Elaine Forbes. Welcome. It's Financial Focus Friday. It is Financial Focus Friday. If you're in the room and you're a bookkeeper, just raise your hand and say bookkeeper. If you're a business owner, just say business owner. Or you can put BO if you're in the room and you are non for profit. Just say non for profit. You're all welcome. But today I want to talk to you about something that I believe every bookkeeper. So bookkeepers come to the front. Social media join us over here and Instagram welcome. Bookkeepers, today I want to talk to you about something that I believe every bookkeeper and every business owner using QuickBooks needs to understand. Hey, a reconciled QuickBook file is not necessarily an accurate QuickBooks file. Let me say that again. You can reconcile every bank account and every credit card account to the penny and still have financial statement wrong. Why? Because reconciliation does not reconciliation answer one question, only one question. Did the transaction recorded in QuickBooks agree with what happened in your bank account? And I've had bookkeepers ask me that question. I've had a business owner ask me the question, if my book is reconciled, is and everything is okay. I have people reach out to me and ask me, can you just reconcile my book? Reconciliation alone does not tell you if everything is okay. It is important, but it does not answer every question about your books. It does not answer if the transactions were correct. It does not answer if your financial statement was reviewed. I want to share 4 points with you today. Just 4 points. And the very first point I want to point out or to show to you today, reconciliation doesn't tell you whether something is categorized correctly or not. Let me give you a simple example. Suppose a business owner transfer $5,000 from a business bank account to their personal account. That transaction clears at the bank. Yes, it clears at the bank. The bookkeeper sees that 5,000 withdrawal in the bank feed and categorize it as an expense. At the end of the month, the bank account reconciles perfectly because it would reconcile to zero. Does that mean that the books are correct? No. The $5,000 may have been an owner's draw or a distribution, not a business expense. The bank reconciliation is not going to tell you that. QuickBooks isn't necessarily going to stop you and say, wait a minute, you put that in the wrong place. That's where accounting knowledge and review process comes into play. So when I review books, I don't stop at the bank reconciliation. I want to know if does this transaction belong to the profit and loss account? Does it belong to the balance sheet? Does the classification make sense? I don't just stop at the balance at the reconciliation. I ask these questions. Number two, I look for balances that does not make sense. And I know somebody might say, how do you know that a balance does not make sense? I start with a financial statement and ask very simple questions. Does this make sense? Sometimes we get so accustomed to looking at numbers, we stop asking questions. Let's say you are reviewing accounts receivable. QuickBooks say customer owes $75,000. That number in itself doesn't tell me enough. Depending on the type of business, I want to know, how old is $75,000? Are those customers really going to pay? Are there invoices from 2 or 3 years ago still sitting down? Did the customer already pay, but the payment wasn't reconciled, wasn't recorded, correctly? Should something have been written off? The same thing applies to accounts payable. If QuickBooks say you owe $10,000, I want to know, do you really owe the vendor $10,000? If the answer is no, something needs to be investigated. A good bookkeeper doesn't simply report the number. A good bookkeeper questions the number. And number three, pay attention to negative balances. That is a red flag. When you look at the QuickBooks account and there are negative balances, I want to know, was this account correct? A negative balance does not automatically mean something is wrong. Don't get me wrong. A negative balance does not necessarily mean something is wrong. But it should stop you long enough to ask a question. For example, if you have an asset account that normally should have a positive balance and suddenly it has a negative balance, why? Why? If you have an accounts receivable has an unusual negative customer balance, why? If a liability account does not behave the way you expect it to, why? Don't simply say, well, that's what QuickBooks says. QuickBook is reporting what was entered. And in the early days of computer, we have something that we say GIGO. If you know what that means, put it in the chat. If you know what that means, put it in the chat. In my early days of computer, we always say GIGO. That same principle applies to QuickBooks. It's just reporting what was put in. Your job is to determine whether that what was entered makes sense. That distinction is extremely important. So if you're a business owner and somebody's entering it for you, or even if you are entering it, and when you look at it, you should be able to say, does this make sense? The very next thing, number 4 thing that I want us to look at is look at accounts that never clear. Here is a here is another frequent one I see. There are certain accounts on your balance sheet that should move, money comes in, money goes out, balance increase, balance decrease. But sometimes you'll see an amount sitting in an account month after month, year after year. For example, payroll liabilities. This is an account that money comes in and then money goes out. But sometimes it's sitting on your balance sheet because payroll is processed and QuickBooks show payroll tax payable. That's normal. But those tax eventually supposed to get paid unless you don't pay the government. So I'm looking at the balance sheet and see payroll liability. They have been sitting there for months, years. I am going to ask the question, why is this still here? Did we pay the government? Maybe the payment was not recorded correctly. Maybe something was duplicated. Maybe the liability wasn't clear properly. Or maybe the business actually owes the money. Those are very different situations. And that's why we investigate. The big lesson here I want you to take away from today's Financial Focus Friday. Reconciliation is a process. Financial statement review is another process. You need both. Reconciliation helps you establish that the activity in QuickBooks agrees with the external record. Financial statement review helps you determine whether the resulting numbers are reasonable, properly classified, and complete. That's different skill. And it's one of the skill that separates someone who simply knows how to operate QuickBooks from someone who understands what the books are actually saying. So I want you to start developing a habit. When you finish reconciling, don't just close QuickBooks and say, I'm done. Run the financial statements. Look at the balance sheet. Look at the profit and loss and start asking, does this make sense? What changed? Why did it change? Is anything unusual? Is there anything here I have to investigate? Those questions will make you a stronger bookkeeper. And if you're a business owner and somebody is doing your books, when you run the financial statement, look at it. Ask, does it make sense? What changed? Why did it change? Is anything unusual? Is there anything that I need to investigate? Understand your books. And this is exactly why I created the Confident Books financial statement review method. Over the years, I developed a systematical way of reviewing financial statement so that I am not just randomly looking through QuickBook hoping something jumps out at me. There's a method to the review. Or like we say in Jamaica, there's a method to the madness. Or a madness to the method. And this coming Tuesday, August 11th, I am teaching a free workshop, How to Review Books Like an Accountant. We're going to look more closely at financial statement mistake bookkeepers often make and how you can develop a structure review. If you're a new bookkeeper, this is for you. If you have been doing bookkeeping for years, but sometimes looking at the balance sheet and wonder, what exactly should I be looking for? This is for you. And if you work with tax client and you have started offering bookkeeping service because you see the condition of books coming at tax time, I especially want you there. Before I go, remember today's Financial Focus Friday lesson. Reconcile reconcile a reconciled QuickBooks file is not necessarily an accurate QuickBooks file. You can reconcile every bank account to the penny and still have financial statements that are wrong. Don't just don't just ask, did I reconcile it? Start asking, do these financial statements make sense? That's where the real review begins. Join me on Tuesday on how to review the books like a CPA. And I will see you there. Thank you for those who joined us today for Financial Focus Friday. It's been a pleasure being here with you. And for those who are over on YouTube, make sure to say hi. Those on, where are you? Facebook, hi. Those on Instagram, hello to everyone. Thank you for coming. And if you're watching the replay, please do say hello to Elaine because you know it's social media and Elaine likes to be social. So, with that said, I'll see you next week here again for Financial Focus. And don't forget to sign up for the bookkeep the confidence book workshop, free workshop at bookkeeping mastery academy forward slash bookkeeping mastery academy forward slash workshop, bookkeeping mastery academy forward slash workshop. Have a good day. Welcome to those who are coming over here on Instagram. I will put the link. The link will be either below the video or above the video, somewhere in this video. You will see the link to sign up for the workshop on Tuesday. Have a great rest of your afternoon, and I will see you. If I don't see you on Tuesday, I'll see you next week. But make sure I see you guys on Tuesday. Bye. 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 Oh, guys, make sure you're following me on Instagram and on Facebook, Forbes Biz. Forbes Biz. And if you're on Instagram and Facebook, make sure you're following me over here on YouTube. Ta-ta. See you later. Y'all know I don't know how to end these lives.